This is gonna blow your mind. Welcome back to Universal Insight. Please subscribe to my channel and press the bell icon in the bottom for more updates. Supreme Court Showdown. The fate of Trump's tariffs hangs in the balance. Imagine Wall Street on edge, global markets in turmoil, waiting for a Supreme Court decision that could reshape the global economy overnight. What if the court made the call and the tariffs were gone in an instant? Let's break down what could happen next. Imagine for a moment the Supreme Court stepping in and issuing a dramatic reversal. Such a decision would ripple through the financial world like a shockwave, instantly changing the landscape. It would be as if someone pressed a giant reset button on market risk, erasing months of uncertainty in a single stroke. The anticipation, the speculation, the endless debates, all would be replaced by a new sense of clarity. Investors who had been holding their breath would finally exhale, and the mood would shift almost overnight. This reset would send a powerful signal to markets everywhere. Suddenly, the risk premium, the extra cost that investors demand for facing uncertainty, would begin to evaporate. The tension that had gripped trading floors would give way to a wave of relief, as the unknowns that once haunted every decision faded into the background. The risk premium, that invisible tax on uncertainty, would vanish almost overnight. Investors would no longer need to price in the fear of unpredictable outcomes, and the cost of doing business would fall. Markets would become more efficient, and optimism would start to build. Credit spreads would tighten dramatically, reflecting a newfound confidence in the system. Companies would find it easier and cheaper to borrow money, fueling investment and growth. Financial analysts would quickly adjust their forecasts, and the cost of capital would drop, making new projects and expansions more attractive. This surge of confidence wouldn't be limited to one country. It would echo across global markets, from New York to London to Tokyo. International investors would see the US as a safer bet, and capital would flow more freely. The entire financial system would feel the boost as trust and stability returned. Currency markets, often the first to react to uncertainty, would stabilize. Exchange rates would settle, and volatility would subside. A risk-on sentiment would sweep across the board, encouraging investors to seek out new opportunities and take calculated risks once again. With political uncertainty fading, the market's focus would shift decisively. Instead of reacting to every headline or rumor, investors would return to analyzing economic fundamentals, earnings, growth, and productivity. The conversation would move from speculation to substance. This change would be like the first domino falling in a long chain reaction. The effects would spread quickly, influencing everything from interest rates to investment strategies. It could be the most powerful shift the markets have seen in years. No longer would the market be held hostage by political drama. Instead, it would respond to real, structural changes in the economy, data, trends, and fundamentals. In this new environment, risk would truly vanish, and a new era of stability could begin. With uncertainty finally lifted from the global stage, a powerful rally would ignite across financial markets, sending a wave of optimism through investors and businesses alike. The end of trade tensions would act as a catalyst, sparking renewed confidence and risk appetite. This surge would be especially pronounced in trade-exposed sectors and emerging markets, where factories would ramp up production and ports would bustle with renewed activity. Exporters, previously held back by tariffs and uncertainty, would seize new opportunities as global demand rebounds. Countries in Southeast Asia, Latin America, and Eastern Europe would see a resurgence, with their cities buzzing as businesses expand and new jobs are created. These regions, often at the heart of global supply chains, would benefit from increased trade flows and investment. A reversal of tariffs would restore confidence among business leaders, encouraging cross-border deals and unleashing a wave of fresh investment. Companies would once again look to expand operations, hire workers, and sign new trade agreements. Stock markets from Seoul to São Paulo could experience explosive rallies, with investors pouring capital into these regions in anticipation of rapid growth. Financial news would be dominated by stories of surging indices and record-breaking gains. Investors would see these markets as undervalued growth opportunities, eager to capitalize on the momentum. Analysts would highlight the potential for strong returns as economies accelerate and corporate profits rebound. This creates a virtuous cycle, strengthening local currencies and helping to control inflation. As confidence grows, borrowing costs fall, making it easier for businesses and consumers to invest and spend. Emerging markets would be seen as the primary beneficiaries of the trade war's end, stepping confidently into a new era of opportunity, growth, and global relevance. Surprisingly, the United States dollar might strengthen. Removing tariffs would signal a return to stability, attracting global capital. Safe haven assets like the yen and gold would weaken as their value diminishes. Money would flow back into United States dollars and assets. This dynamic signals a risk-on environment, with the United States as a reliable investment. The bond market would face a complex impact. In the short term, removing tariffs would be disinflationary, lowering consumer costs. The Federal Reserve might cut rates sooner, rallying short-term bonds. However, long-term growth could lead to inflation, raising long-term yields. The bond market would balance short-term relief with long-term optimism. A Supreme Court ruling could trigger a massive fiscal event. The United States government might have to refund billions collected from tariffs. This would create a shock to the U.S. fiscal position, exploding the budget deficit. The Treasury would issue new debt, affecting the bond market. Companies receiving refunds would gain a windfall, stimulating the economy. The end of tariffs would fundamentally reset global trade relationships, marking a turning point in how nations interact economically. Without the barriers that have long shaped international commerce, countries would be forced to rethink their strategies, alliances, and priorities. This shift could open up new opportunities for collaboration, but also introduce fresh challenges as markets adjust to a new reality. Allies like Europe and Japan would likely welcome the change, seeing it as a chance to rebuild strained alliances and restore trust. The removal of tariffs could lead to increased trade flows, more investment, and a renewed sense of partnership among traditional allies who have faced uncertainty in recent years. For China, the situation would be more complex. While Chinese exporters might benefit from easier access to global markets, the government would need to balance these gains with its ongoing push for self-sufficiency and technological independence. Navigating this new landscape would require careful policy adjustments and strategic planning. Meanwhile, some countries might seize the moment to demand new trade agreements, pushing for stronger enforcement mechanisms and clearer rules to prevent future disputes. The negotiation table would become a focal point for shaping the next era of global commerce. The memory of recent trade disruptions and economic uncertainty will linger, influencing how nations approach future negotiations and the level of trust they place in one another. Ultimately, the end of tariffs could kick off a new period of global economic renegotiation, where countries must adapt to a rapidly changing environment and redefine their roles in the world order. A tariff reversal would create clear winners and losers. United States automakers and retailers would benefit from lower costs. The technology sector would restore efficiency and lower costs. United States agriculture would regain its biggest export market. Domestic industries like steel might struggle with renewed competition. Export-oriented economies like Germany and China would see brighter prospects. A Supreme Court reversal of tariffs would be a complex reset with mixed consequences. It highlights the interconnectedness of our world and the fragility of global systems. The decision could trigger a global economic reset or unleash new uncertainty. This is a developing story, still being written in courts and boardrooms. Stay tuned for more updates on this unfolding narrative.